Mphasis, the company did come out with a strong set of numbers, but what is the outlook there? Let's understand more of that with Mr. Nitin Rakesh, who is the CEO of the company, and Mr. Arvind Vishwanathan, who is the CFO, is also joining us on the show right now. Hi, very good morning, gentlemen, and thank you so much for your time. Firstly, congratulations on a good set of numbers. Believe that the company has reported its highest quarter-on-quarter growth in the last 12 quarters. But Nitin, everybody is waiting by to listen. What is the outlook going ahead, and how is the demand outlook shaping up when it comes to the BFSI as well as healthcare clients? So let's start with that. How do you see FY26 shaping up, especially for these two segments?
Thank you for that. And I think this is definitely a fairly interesting but dynamic time as well, because it's very difficult to get a view on where the macro is headed. But I'm pleased that the focus that we put on going client by client and really focusing on the client value propositions is starting to show up at least in many parts of our business. And I think BFSI and TMT stood out. The current shape of the pipeline is pretty strong. We've seen a pretty strong growth of almost 84-85% in YOY, just the business pipeline. Large deals have actually contributed a fair amount to that in terms of increasing it. Deal wins for Q4 were pretty strong as well. We did 2 large deals in Q4. One of them was over $100 million deal in banking. So I think the fact that BFSI and healthcare both really are not in the direct line of fire with the tariff related headwinds, they're probably more a second order impact, but definitely makes it an interesting segment to play in, because the adoption of new tech stacks and AI infusion definitely is picking up pace, especially with banks. They're pretty forward leaning on adoption of new tech. I think insurers have had an opportunity to leapfrog, given that they were still in the digital chassis build out phase, and Gen AI will give us to that as well. So both of them seem pretty interesting. For our healthcare business is a little bit more payer focused. I think our Mphasis Javelina platform plays a pretty big role there. So that seems to be looking interesting as well, purely based on the pipeline, even though we had a little bit of a challenging year with healthcare in FY25. But outlook for 26 looks pretty strong for all of those 3 sectors: banking, insurance, and healthcare.
Nitin, tell me, what is it that you're feeling from your clients right now? Because, it's really about what the future visibility is when it comes to your sector, right? So many gray areas there. Because I can see that $390 million is what you've reported in your TCVs this quarter, which is the highest in 7 quarters. But do you think, given the uncertain environment right now, will you be able to sustain this?
Yeah, I think at this point, given the success we've had in the last 2 quarters in converting the pipeline to TCV and then the TCV to revenue, as you saw in Q4, we do feel good about where we stand, purely at the strength of our AI-infused offerings and propositions. So I think the early investments we made in making sure that we are leading with tech solutions versus people-based services, we are definitely making opportunities out of client problems and ensuring that we are aligned to the strategic priorities and their outcomes. So I think it's a little bit of a mindset that in an uncertain macro, you start to make sure that you focus on the micro. And that means going client by client, understanding their priorities, solving their problems, and using tech in a big way to actually bring that savings-led transformation thesis to play. So I think it's more a bottoms-up approach to the business right now. I don't think this is a tailwind to the business purely because the environment is conducive to it or discretionary spend is picking up.
Very good morning, Nitin, as well as Arvind. Arvind, let me come to you, because we just spoke about the TCV, the deal wins. But I want to understand, about 85% of TCV is coming from next-gen services. If you could help us understand, what are clients actually prioritizing when you talk about tech spends? And are you seeing any other verticals actually see that sort of a significant push?
No, we're seeing a lot of AI-led deals, right? I think Nitin talked about it, the entire IT value. Modernization is a big thing. Agile IT is a big thing. So we've seen all of those kind of pick up substantially. You've seen a pipeline go up both in BFS and non-BFS. So we've seen, I would say it is a little bit across the board. These are requirements. Some are early adopters, But I would say that, we are seeing this across, and I think we are quite excited. Nitin talked about it. BFSI has grown well. We've seen insurance pick up. We've seen a lot of growth in TMT. And I think the pipeline is strong for the other sectors also. So I think it's a little across the board growth in pipeline, and we need to execute on converting them. So that's the key focus right now.
All right, but Arvind, how do you see the margin picture shaping up, given the fact that sequentially when we see EBIT margins, that's almost flat at 15.3%. But given the kind of tailwinds and headwinds that you foresee, where do you see the margins numbers going ahead?
So we've kind of given a range, right? Entire of last year, we had given a range that we would operate between 14.6 to 16, and we kind of ended right bang in the middle of it at about 15.3. I think right now we are comfortable with a range between 14.75 to 15.75. So we actually narrowed the range. The main reason for a range is, and Nitin kind of talked about it, there are multiple elements that we are looking at. There are large deals in the pipeline which may require investments that we need to make upfront. There are big bets we are making on AI which will require investments. We are creating a large deal teams which will require investments. And so a lot of the uptick that we may see in gross margins will get pushed back into investments in these areas. So I think this is the range we are in, and we are operating right in the middle of that range right now.
Right. Nitin, right now, what would you say is the biggest strength and the biggest sort of threat for your business going forward?
I think it's kind of a double-edged sword that, on one hand, we have a very difficult macro environment. Decision-making is difficult. Uncertainty is very high. There are certain segments of client industries that are in the direct line of fire, right? Anything with global trade, manufacturing, auto, oil and gas, logistics and travel. And then there are obviously other industries that are in a different trajectory. On the other hand, there is also a pretty significant tech refresh that will get unleashed. Again, these kind of restacking of the tech estate takes time. It's not a 1 year, 2 year effort. It's a mega trend. But I think the tech adoption of infusing AI in every aspect of IT and operations is just about starting. So I think if you're going to put all of that together, both the threats and challenges kind of arise from these two countervailing trends. AI in itself can also be a threat if you don't have the right propositions, because you might actually end up being on the wrong side of that and lose a lot of volume. So we are very laser focused at this point on making sure that our propositions are tech enabled and infused in a manner that we can stay current and actually lead the client in the direction that we know that they're headed.
All right, then we leave it there, gentlemen. Thank you so much for joining us on ET Now to talk about the quarter gone by. It was a healthy one, inline set of numbers coming in for the quarter, and all the very best for the new financial year. And thank you so much for being the part of the show. That was the management of Mphasis talking about the quarter gone by, as well as what they project for the year ahead. But on that note, we slip into a break on this edition of the...
If you like this video, then like, share and subscribe to ET Now.